Hi, this is Kasian, and it's time for our weekly conference call. We'll start with what's happening around the world. In particular, there are major changes in upcoming geopolitical structures, and we're also looking at the Dow taking a pretty significant retrace in the middle of the day today, down near 900 points. And that's because of a global concern related to a second wave of COVID-19. And this might seem like we're in the doldrums a little bit, but it really seems to us internally like we are in the eye of an economic hurricane, eye of the storm here. And that could be a second shoe dropping. We don't know what it's going to be or how long the traditional markets will retrace, but what we do know is that there is an impact to our market, the crypto markets. So we'll talk about that in a bit. But on the industry side, we're looking at, and again, when we say industry, we mean natural language processing, natural language understanding, and data sets, AI and machine learning. We are looking at OpenAI having produced its GPT-3 model, looking for new ways of monetizing this model, this language model. And there's a revenue model associated to a language model. And the world's going to see how this consortium will put out their plan for generating revenue. But it's something that we should be watching, because if you do a search for GPT-3 and financial products, you'll understand how this connects to everything that we do and the financial markets and every industry. We also talk a lot about thematic investing. We post relevant news and events related to, and developments related to the world of thematic investing. Smart baskets are a theme, and thematic investing is enabled by language models today. And that's something that might interest any one of you that are doing any work in data engineering or natural language processing in the financial markets. On the crypto side, we are getting investment groups that are asking us if we can leverage the DeFi trend. And that's not how it's done. We'll explain this in the strategies section. But briefly, DeFi is a very quick way for certain companies to make money, and we won't be tainted or classified as a company that just simply cuts, copies, and pastes things in our product line or in our documentation or on our site related to the latest trends. That's not how you build a company or products or a customer base. We are interested in interfacing with groups raising capital that look far beyond that understand the long game, as we usually talk about, and understand our long-term vision and the big money, not the little money. And on the crypto side, the retrace correlates in the crypto markets. We're looking at a retrace currently, and it correlates to the traditionals. And the traditionals correlate to a cure for the virus, which is what we're all working on, including with our own data sets in the life sciences industry. Moving to the corporate side, that's steady as she goes. Corporate is still essentially gated by what's happening on the customer side with incoming customer customizations, feature requests, and so forth, and then what's happening internally with engineers and how fast engineering is moving. So there's not much for sales and marketing to do except continue to throttle. And if we move to the engineering, product, and operations side, we're looking at Arena, Magnus, Vihar, and Muldoon working very closely right now to get the 1.2 release of the DTK out, the Dataset Toolkit version 1.2. And this has been a large effort on our part, and as we've gone through customer discovery, we have found things that we've needed to adjust and adapt and modify so that we get a more perfect product market fit. In that, we've noticed that dataset design is critical and a critical part of the process of customer onboarding, involving them in the every aspect of the dataset design. We've also noticed an interesting pattern where just about 90% of every point person that we've talked to inside of companies, from Amazon to Two Sigma to Bitvor to Companies recently that we've talked to, S&P Global and Bloomberg. It's usually an executive level that we're talking to, or a front office person, not a data engineer. And what that means is when we provide information related to our company, or when we provide a link to the Dataset Toolkit. The Dataset Toolkit, it's designed for a data engineer, and data engineering, data science, artificial intelligence, machine learning is one of the most complex forms of software engineering you can engage in, and giving that to someone who doesn't engineer software, cut code, is going to be a problem. And that's the kind of problem that we solve, would be putting something into the hands of someone that is ordinarily not used to using that product, and then enabling them to see the value. And that's what the Dataset Toolkit does. And the Dataset Development Kit 1.0, that's in progress too. And we've also got release dates associated to those, soft release dates. And we're going to say about 2 weeks out. We're not going to give a hard release date. And that's because we are still working closely with customers and flushing out customer needs, concerns, and features that might be valuable to include in both products. I also have notes on the summary of our data engineering call. And one of the reasons for that is we've got things that might interest data engineers that we're working on, but we also have things that we do need to keep in confidence and proprietary, part of our trade secret pipeline. One of the objectives that we have on the data engineering side, the dataset side, is to communicate that our datasets can be used to append to the world's time series datasets to increase precision, accuracy, and the bottom line. And when you look at a time series dataset, you're looking at rows and columns. The rows might be stocks, the columns might be 1 minute intervals or time in sales. In a single column, you might have open, high, low, close, volume, things like that, metrics like that. And those metrics are used to determine either whether or not two stocks trade similarly or two cryptos trade similarly. But you can also use natural language processing and R datasets, Vectorspace, NLU correlation matrix datasets to append to your time series dataset to come up with new ways of clustering. And that most of the time equals a new signal, modified signal. So on the engineering side, data engineering side, we also talked about the need for the big red button for the exec levels and the front office people looking at this Dataset Toolkit that we're offering. And a lot of exec levels, front office people, partnership people, strategic partnership people, they will visit S&P Global and they'll look at the description of Vectorspace AI's datasets, what can be done. They'll have a link to a case study and a link to the Dataset Toolkit. And they're going to need to know with just one click or 2 clicks how they can immediately see the value in our datasets. Data engineers go through datasets all day long. Some of them do. And many of them waste a lot of time with datasets that don't provide any value, even though the case study or the documentation shows that it does. So we're providing them with a clear path to value. And that's the difficult part in engineering, is taking something complex and making it simple. That's what we're doing. And of course, the products, the DTK, the Dataset Toolkit 1.2, and the Dataset Development Kit 1.0 sit on top of the vector optimization pipeline, the VOP, VOP. That's what we call that. In the front of that pipeline, you've got models, and then you've got calculations, you've got distance calculations to choose from, ensembles, and in the end, you've got data sets that are being produced and scores that are being calculated to determine relevancy, precision, accuracy. You've got, more importantly, of course, the Sharpe and Satina ratios, returns. Moving to customers, partners, and collaborators, where Richard Levis and a few of our investors are working to maintain customer relationship levels, high levels of customer satisfaction and expectations, forming proper expectations. They're also collecting customizations, continuing to collect customizations for initial customers. And we've got what we have been calling trading desks 1, 2, and 3. We used to call them customer 1, 2, and 3, but they're really trading desks made up of groups of 2 and 3 people that are working at firms that want to use the systems. And we have got another delivery. We've got what we call a square matrix. These are pharma companies, biopharma companies that we're delivering to customer number 2. Customer number 3 has a financial modeling product, and we'll be bundling recommendation system there. We've talked about that before. Now, one pattern that many have seen is that as a company, we keep forming revenue sharing dataset distribution partnerships. And our initial partner pipeline and customer pipeline looked like, and this was pre-pandemic, it included Bitvor, BlackRock, 2 Sigma, WorldQuant, JPM, Binance Labs, Accenture. Now, post-pandemic, we looked at our path to revenue, and we determined that there would be a quicker path to revenue, and that we would find multiple quick paths to revenue. And that resulted in us contacting Amazon and going through some of our old contacts at Microsoft and understanding what they had to offer in terms of dataset distribution deals and revenue sharing agreements. And they were very broad, and they were Amazon was more focused on life sciences, and we knew that we would have to commit 100% of company resources to both of those companies, if not just one alone. Now, another thing that happened, let's say we were prepared for this opportunity, and that was that companies such as S&P Global, this is a perfect example. S&P Global mentioned to us when we initially established a dialogue with them that 6 weeks earlier they had just rolled out a dataset distribution platform. Amazon, when we talked to them, they were just getting it together, and Microsoft wasn't as far as Amazon when we talked to them. Bloomberg's alternative data group, they're still working out the details on how they're going to roll out datasets, but they're getting it started. Factset, same deal. Factset decided to put its datasets on Snowflake. Snowflake's looking for datasets. UBS's Evidence Lab is looking for datasets. We keep adding these partners, and people are asking, well, how come the partners aren't talking about us? There's a reason for that, and we know that as soon as we commit to a partner, we're going to have to direct most company resources, engineering resources to that partner. What we've noticed is this trend of companies opening up new data engineering pipelines and new dataset marketplaces. And we are going from company to company, and they are coming to us as well, asking if they can distribute our datasets and share revenue. And we're going to continue this trend, and we are going to take the cream of the crop in terms of the deals. But we're also going to take the long tail. We will continue to maintain dialogues with our earlier partners, but the most valuable partners we have today are S&P Global, Bloomberg's Alternative Data Group, Factset, Snowflake, and CERN. And when we look at Amazon and Microsoft, they are very general dataset distribution points that will require us to scale into them properly. And there's less money available at Microsoft and Amazon than there is at S&P Global. The path to revenue is longer there. So we're going to continue to maintain the most valuable relationship and keep those to the fore. You will hear them talk about us, and you will also find that other companies will be rolling out dataset distribution marketplaces. And it's because most companies, including Amazon, Google, even Apple today, you've got BlackRock, 2 Sigma, you've got WorldQuant, you've got S&P Global, you've got UBS's Evidence Lab, Snowflake. All of these companies know they have to compete based on data sets, and they are not companies that make or create or design unique and powerful data sets. And this is why other companies will be entering our pipeline. And we've got 2 more, including Citi. And most people around the world have heard of Citi, or Citibank as it used to be known. One press release that Citibank had mentioned, or Citi had mentioned earlier, was titled "Citi upgrades data service platform to enhance efficiency for security services clients." So we're in dialogue with Citi now. We're talking with Citi about distributing data sets there in their marketplace. We're also talking to Morningstar. And Morningstar is very interested in doing co-marketing with us, joint press releases. We just talked with them today, and it was perfect timing. Great to include this update in this call. But they are also data providers similar to S&P, and they want us to use their data sources to produce data sets they can distribute, and they'd like to do a royalty-based revenue sharing agreement with us. And they also provide data to Robinhood. So they have a distribution pipeline directly to Robinhood. And we will be using that distribution pipeline. Moving on from customers, partners, and collaborators, we've got legal and HR on the legal side. No news to report there on the HR side. We don't have any news there. And now to the fun sections. IR, PR, and Marcom. What are we going to do to tell the world about Vectorspace? Well, we're not going to do very much to tell the world about Vectorspace. But all those billion-dollar partners are, because they're going to make money with Vectorspace, and they're going to enable their customers to make money with Vectorspace. So we'll talk a little bit more about investor relations and Marcom, PR in just a bit. On the exchanges side, that's in progress. Moving on to questions from the trader base. The first question is, why would Vxv customers struggle? The hurdle to purchase Vxv tokens to use the service while they can also choose Fiat to pay with. First off, there is no struggle. We're in the business of removing friction, and this is what we've been talking about for quite some time. Making something complex, or making something simple that's complex, making it transparent, making the onboarding process seamless, painless. One big red button. That's what people want. And eventually, every customer will have Vxv. They'll own Vxv. So will their machines as they trade Vxv with one another. Anyone can use Fiat or Vxv. If you happen to use crypto, you'll be using Vxv. I'm sure you'll find it more convenient. In any case, if a customer uses Fiat as a reminder, that Fiat gets converted to Vxv as an open buy, or as that buy order on the open market. The next question is, how big is the Vxv team, and how many employees are working more than 36 hours per week and are on payroll? We have 10. Most are working more than 36 hours per week. The next question is, Trustology published a case study highlighting Vectorspace AI. Is it safe to assume that now the onboarding process is fully automated through Trustology? It's not fully automated yet. We do want to keep a human in the loop there until we work out any kinks. Make it as smooth as possible. The next question starts with a couple of statements, actually. Leading blockchain companies are taking services from this firm for PR and marketing. And the firm is mentioned. Can Vectorspace consult with them and see if Vector can partner with them to market themselves across the blockchain industry? I feel that apart from getting exposure to billion-dollar clients and hedge funds, it is equally important to market themselves across the blockchain industry to gain visibility. It can do no harm. What's being asked here is for IR, not PR, investor relations. Now, we are very familiar with investor relations. And investor relations, there's one thing about investor relations. If you do it prematurely, it will not work. So there is no premature movement on our part. There is no putting the cart before the horse. And that means first we have products released and in the hands of billion-dollar customers. Then we go out and talk to the world. That's how it works. We don't do that before. It makes no sense. And we also have our PR firms involved and ready to go. So you can have full confidence we know what we're doing there. Timing, that's what it's all about. Now, the next question is, are there any updates about the Dataset Design Contest? And now there are updates. We have been booked with customers and we haven't had time to fully flesh out all the instructions related to the Dataset Design Contest. But it's something that is integral to our entire effort here. It's an important component of the design of datasets, especially considering that we have over 100 billion designs, possible designs. The next question is, how do you view crypto volatility in the VXV lens? That's a very good question and a complicated question. I personally view crypto volatility the same way I view volatility on a thin order book in any market. And that's, I would say, one aspect of volatility associated to crypto. With VXV in particular, we have got a very thin order book and we trade on a second market. And we like it that way for now. One of the reasons is when you've got a second market, you've got nice, healthy upticks that you can sustain. And we also are familiar with operating in thinly traded markets to full liquidity, organic liquidity. The other thing that we look at is that if the S&P 500 can be driven by a couple of whales, of course crypto can. And crypto as a marketplace, as a global marketplace, the pond is not yet big enough for large whales, very large whales. So you've got all these really large whales sending in their smaller whale sharks to get things done, it seems like, most of the time. Crypto has interesting trading patterns that do affect or act as the tape, act as a bellwether. It BTC, ETH will influence one another and they'll influence the entire markets. Everybody knows about that. But when we look at the volatility of VXV, it's meaningless right now to us. One of the reasons is that there's hardly any money flow happening. You don't have orders trading in size. None of that is happening right now. If you've ever seen an order book, with a 10 million share buy order come across the screen, then you're dealing with orders in size. 10 million share buy order, and this is 10 million shares of, highly liquid S&P stocks. When you see blocks like that go above the ask or below the bid, then you know you're dealing in a real market. Right now, we're nowhere near that. And what it takes to get to that market is to put yourself as a trading vehicle in the position that traditional market traders are used to trading. There's an entire world out there outside of crypto that's interested in trading crypto. And to create an analog and easy to understand trading vehicle that will issue news similar to trading vehicles they're used to, that will communicate to them similar to trading vehicles they're used to, and that will move and have cap tables structured similar to trading vehicles you're used to. That is the way VXV is structured, and that's the way we communicate. That's the way we conduct investor relations. And there's a much larger strategy at hand there that we can't get into now. It's part of what we want to keep secret right now. The next question is, do you look to a future where VXV volatility as a driver overpowers to some extent the sentiment-driven swings? Or do you consider it business as usual and something for the savvy investor to profit from? So VXV, well, first off, one thing we know about trading vehicles is that they certainly do move based on how much value they offer to the public or utility, or how much their products are being used, or how much of a household brand they are, or how much true demand and true supply is out there. But they primarily focus, trading vehicles trade based on what's happening in the future. They trade based on projected outcomes or predicted outcomes. They trade based on where people think things will be 6 months out, a year out. And that's based on perceived supply and perceived demand. And that results in the ability to swing trade. And that's what swing trading is. It exists. Swing trading, the term, exists for a reason. We also anticipate decoupling from the bellwethers, from BTC and the overall market quite a bit. We'll never fully decouple. There is no trading vehicle in the world that's fully decoupled from the effect of the overall market or overall market drivers or sentiment. But there are trading vehicles out there across the board, across every market, that will experience positive divergence. They'll trade above the S&P, they'll trade above BTC for quite some time, and they'll sustain that. And that is where we are headed, and that does connect to the utility of VXV as a utility token. As machines begin to trade VXV with one another, this is what you'll notice. And this is one of the advantages of having programmable money. That is that the US stock markets won't ever have machines trading fractionals of stocks with them for columns inside of a data set. The traditional financial markets are just not structured that way, and that's why we're in the crypto markets. Our last section is the strategy section. And in that, we'd just like to reiterate that dataset aggregation, appending Vectorspace NLU datasets with financial time series datasets, is our current driver. That's what we focus on in terms of communicating the value of what we do to our customers. And that just doesn't include the financial markets. It includes what we're doing with CERN. It includes what we're doing in the life sciences industry and others. From here forward, though, it's going to be all about execution. And that's why we're looking at adding new revenue sharing companies interested in opening dialogues with us, adding them to our revenue generating partner pipeline and our collaboration pipeline. And it's also important to note once again that for the first time in history, companies are building out dataset distribution pipelines, data lakes, where datasets exist and can be either accessed by third parties or their own customers or internal groups. Datasets are driving every aspect of artificial intelligence and machine learning. And in turn, artificial intelligence and machine learning are driving every aspect of industry today. So we look at things in terms of months and weeks related to how long companies have been involved with developing their own dataset distribution pipelines. And this is significant because, again, this is the first time in history just about every company in every industry is thinking about building out a data engineering pipeline, a data science pipeline, which enables them to make better predictions for the bottom line, increase the bottom line by 10 or 20%. Who doesn't want that? So they're implementing AI and ML systems to do this. And we are right there structuring the dataset distribution network with a number of companies, all of which are revenue sharing companies that have revenue, that want to do revenue sharing agreements with us. And that is something that will drive value of VXV, drive the overall value of our company. it's that kind of growth that we can expect based on the patterns that we're seeing in the data points we're collecting at this point. Thanks for joining. This has been a pre-recorded call. If you have any questions, feel free to post them online for us.